Hello, I'm Anna Efrim, and joining me now is Livia Benisty, Global Head of Business AML at Banking Circle, which is supporting banks and payments businesses as they seek to add value to their business-customer relationships. Mention complies, and there's often little positivity in response. It's a must-have, a tick box. However, a new study by financial utility Banking Circle takes a different point of view. Hello, Livia, and thank you for joining us. As we know, anti-money laundering is usually seen as a burden that hinders rapid innovation and basically slows down essential processes. Can you please tell us, Livia, can it bring any benefits to the business or customers beyond compliance?
Sure. I think there are probably two ways of looking at this. So there's what benefits can AML bring to the wider organization beyond just having to comply with the regulation, both to the business and to the customer. And then there's the benefits of doing it right. Like if you have to do AML, you might as well do it right. So on the first side of things, what benefit can the practices of AML bring for the wider organization? I think a lot of people often talk about this, but it's true. The insights you're getting from your customer, the information that you're gathering around who they are, why they want to use your service, what business they're putting through you, and then continuing to monitor that over the time, you do get insights into the usage of your products, the personality of your customer, their needs, their drivers, and that has huge commercial benefit. So all of the things that you gather for AML, you can also apply for a commercial purpose. And if the right teams are integrated and speaking to each other and not operating in silos, that can be hugely beneficial. And then you're providing better products and services for your existing and future customers. The second side to that is if you do have to do AML, and you have to comply with AML regulations, what benefit comes from doing it right, from getting the technology right? And using the right technology, using better, more modern approaches can mean that your operational workload is drastically reduced. Current systems and processes produce large amounts of inefficiencies. You just seem to feel like you need more and more people to deal with increasing numbers of alerts or hits against customers or their behavior. If you get this right, the efficiency goes up, your manual workload goes down, you can detect more quality. The hits that you're generating on your customer's behavior is of a higher quality, so you're actually detecting the things that you want to, and then again that feeds back into just providing you extra insight into your customers, and you can use the same technology to decide how you price, how you strategically grow, which markets you go into, etc. So it comes full circle.
Thank you. But why haven't, let's say, artificial intelligence-based approaches been widely adopted so far? What are the hurdles standing in the way?
I think artificial intelligence tools are definitely amongst that kind of new technology. When I talk about doing it well and introducing new, more modern technology, AI is up there. But there are probably three key hurdles, I think. The first is that it's very expensive, especially if you want to introduce it yourself, right? If you want to build this in-house, you need to hire experts who are paid a lot of money because there's a lot of drive and desire in the market for these skills. So the experts are expensive, and this is at a time where IT budgets seem to be pinched quite a lot. So that was something that came through very strongly in our survey, the decreasing IT budgets. Given the expense, it's also important to understand the foundation that technology will be built on. You have to implement and integrate this technology into your existing infrastructure, and legacy IT is a huge problem. You have to be able to extract data, the volume of which is debatable, but the quality of which cannot be. It has to be good quality data, and that in and of itself can be a hurdle to overcome. Thirdly, I think it is fear of regulators. We see a lot of regulators now talking about encouraging innovation, regulatory technology, and how they understand intuitively and theoretically the need to move forward with these technologies. But I don't think that the supervisors are necessarily always ready to see it in place at a financial institution. So there's some more lobbying, there's some more education to be done on that front. And until that's more secure, I think we'll continue to see some hesitation.
All right, thank you so much. And considering the following, if legacy infrastructure is basically preventing banks from implementing artificial intelligence-based approaches, and IT budgets are severely stretched for all financial institutions, is artificial intelligence just a pipe dream?
I think there are definitely some people who would say that, but in my mind, we don't actually have any option, right? We want to move forward in this. We want to be able to detect more. The famous statistic that we detect 1% of financial crime that goes through the global financial system is not good enough. But it's also hugely costly and inefficient for companies. So it's bothersome from both a commercial and an idealistic effectiveness perspective. We're not actually achieving anything we want to achieve, and it's hugely expensive in the process. So whilst some people might consider it to be a pipe dream, I don't think we have any option. We just need to figure out the best way to implement. Fines are going up, the reputational damage that causes. Companies are going to be looking for a better way and need a better way. That workload piece being, you can't just keep hiring people to look through pointless alerts. And I think that when you are using just pure numbers of employees to try and analysts to try and disposition alerts, they get very demotivated because 95% of what they're looking at is rubbish. So they don't feel value in their own. So it has this repercussion where it's not just that it's expensive, it's the overall quality of the work that your team is doing will continue to go down. When you combine that with innovation in technology, in financial technology, where things are moving with faster payments, with blockchain, with new products on the market at all times, we have to improve our compliance and our AML strategy in line with that technological innovation.
All right. Then following up from that, then for those institutions specifically looking at investing in the artificial intelligence and the AML, or just collaborating with an external provider to deliver a new solution, where do they start from?
I think there are two places you need to start from, or at least you need to make a decision whether you do this in-house or buy, right? The build or buy debate is a constant one for when you're working in RegTech, or when you're dealing with RegTech, is how do you convince people to buy, not build, etc. But essentially, you start with a decision: are you going to build? Are you going to buy? And then I think there are two key things to focus on. The first is the broader issue of integrating AML with your wider organization. So any kind of technological innovation, any kind of digitization cannot happen in a silo with one part of your business. You need to have this as a culture and a process across the entire company. And AML has too long, as has compliance, too long been siloed into its own team and column of work to be kept away from the way that the business runs on a daily basis. And that's where it stops working straight away. So before you deal with any technology, integrating AML into the broader framework of your digital transformation program, making sure it's operating off the same sources for data, the same computer program, that we are all operating off the same foundation, and that AML is integrated in understanding what new products are coming, what new markets we're going into, etc. That's the first thing, because otherwise any kind of data that is being used, any integration of a new technology will be operating in such a small capacity in the company that it won't have the impact that it could have. So the first thing is to organizationally integrate AML. And the second thing, which is said all the time but cannot be said enough, is the quality of your data. Tidy up your data. Our data scientists at Banking Circle will say that you actually don't need huge amounts of it, but you need really good quality, and you need to understand the sources where that's coming from. So it has to be clean and well labeled. And we definitely saw that in our survey as well. So the Banking Circle survey, I'm actually surprised, only 24% of respondents said that data quality was their biggest concern. I think understandably data privacy data security came a bit higher, but I would have thought that data quality would have been higher as well. 24% is still a large amount of people that agree that that's the biggest roadblock to driving them forward. So identify what data you'll be basing this off, make sure that it's clean on a company-wide basis, and integrate that into your broader strategy. And those, I think, are the key places to start.
Wonderful, thank you. And lastly, what do you think the big rewards will be for those institutions that do take the leap in 2021 and beyond?
Internally to the organization, there are the obvious ones of efficiency and manual workload, cost saving, post investment. I mean, the initial investment will be costly, but after that, those efficiency gains will give you that return on investment that you're looking for. If you go about it in the way that means that AML becomes integrated into your wider organization, then the collaboration that you generate internally will improve your AML far more widely than just the tech and the efficiency. And I think that that's particularly key. And the quality of your output becomes higher. So like I said, that issue of transaction monitoring analysts becoming incredibly demotivated because they're looking through 95% of poor results, you will see their workload minimized, but the motivation and the quality of what they're looking at go up. And I think that those are all valuable things, right? So that those are your commercial, if you're a compliance officer and you're trying to convince your CEO why they should invest in this and why they should give you budget, those are your commercial, budgetary, numerical reasons. But we also need to remember that we're trying to drive an entire industry forward, right? So that the only way that happens is when we start to collaborate, work with regulators, and drive the norm into a new era. And that will move the needle. And the ultimate goal of all of this, of course, is to actually detect financial crime, right? The root of financial crime are activities like human trafficking, wildlife trafficking, drug laundering, etc. We can talk about the efficiency gains internally, but ultimately it's about driving us forward on that metric too. And I strongly believe that this is the way that we have to do that.
All right. Thank you so much for your insights, Livia. It's been a real pleasure. And thank you all for watching.